Greetings all, Ben here from East West. Just going to take our weekly dive into a little bit of uranium, last one for the year. So a happy new year to you all. I hope you've had a good 2023 and looking forward to a good 2024. And then a massive thanks also to everyone who has liked and subscribed to the channel through this year. Thank you for your support. It means a lot to me. So let's jump into it. I think this week we're just going to look at URA. Obviously there's a little bit going on there, and we'll just look at URNM as well. So we'll just start here with URA, and obviously we had dividend day. Okay, so the market started trading ex-dividend, and that's why we had this big gap down on Thursday. And then today, just for the last trading day of the year, we fought back a little bit, but you know, last day of the year, there's probably a lot of people not trading. It's pretty inconclusive. But I did take a look at some of this stuff, just some Reuters stories that popped up, and then just talking about 2023 in general. So that's kind of what I wanted to look at. And you know, this story goes on to just suggest that, you know, obviously we've had a very good year, and a lot of the uranium stocks have risen very, very strongly throughout the year. The only thing that grabbed me is I just looked at this Liberium. I don't know who these people are. Expect supply deficit of 300,000 pounds in 2024. Spot price at 74.25 average. Well, that's as per their October forecast. Obviously, we're a long way through that already, but you know that they're expecting that the deficit will continue in 2024. The only thing I would think with that is so look, that kind of keeps like the thesis alive, right? The only thing that sort of bothers me a little bit with that is you just think when there's a supply gut like that, that supply will eventually, there'll be more supply coming on to meet demand. So I think that's the question now moving forward in 2024 is, will we see supply ramp up to meet that demand and therefore dampen out the thesis somewhat? I mean, I think that's a question for down the track, but that would be the sort of question that I'd be asking myself at this stage. You know, we've already seen Energy Fuels has put on a few new mines, and as I think I've pointed this out before, as the price of uranium gets higher and higher, you know, the benefit of mining more and more will increase, and that is likely to, you know, help ease the deficit. But whether or not that deficit can become a surplus, well, I think we're a long way away from that. So I'm not going to go into the ins and outs of the thesis, but that might just be something to consider, to ask yourself in 2024, I think. So that little tidbit out of the way, let's just have a think about URA and see where we sit. So, I mean, the first thing we need to consider here is we've got to think about the performance of URA from the opening day in January 2023 to the closing day today. And, you know, we're up 37.25% as far as I can work out in this chart. We're up 37.25% for the year. So that, you know, that's a great year. Okay, so, you know, if 2022 was the year of the correction, you know, sort of where do we start? Like, this is all sort of corrective, even though into 2023, well, 2023 has been the year of the trend, right? Because we've basically, since, well, this low here in March, we've been on an incredible tear, and you know, that's great. So even though, you know, it took a long time to get through all this correction, now we've had a big rip. So I think the question now is this big rip over, and are we set for another correction? That would be the question in my mind. But let's just see what the evidence is telling us as we sit here and now. So as we look at URA, the biggest component is obviously CCJ, which is about 23% of the ETF. Now, this is just the seasonal performances of CCJ because it's got the longest history. But what we can see is, even though we've had a down month in December, and a lot of that, I guess you could actually have to switch this to a monthly. We did buck the trend a little bit, and December has been in CCJ has been up 53.5% of the time. But obviously URA itself has had a down month. I didn't do the seasonality on URA because there's just not enough history to really make it worthwhile, whereas CCJ sort of is. But I think the thing is, now we're coming into January, CCJ has been down 48% of the time in January. So we're coming into some of the, and even looking at February, we're starting to come into some of the more cyclical, the seasonally weaker times for uranium. So will that herald the correction? Well, of course we don't know. This is just what we base off history. But nonetheless, we are coming into January. It is traditionally a weaker time. So look, overall, this trend is still intact. We're still within the trend channel, okay, on a candle basis, and we're in balance here with the Ichi. I mean, the one good thing is that this week, even though it's a big down week, it has brought us back to the Tenkans, and so we're in balance here between price and time. So that can kind of stabilise the market somewhat. It just sharpening this up to a weekly line chart trend. The same thing. We're still within this trend channel. We've still got, maybe you can just extend that out a little bit, but we're still trending higher, even though we've got a little bit of a question mark coming in here through this week. The broad picture is still pretty good. I've pointed out the Elliott wave factors that suggest that we've potentially got some tops going in here, which we'll look at in a moment. But generally speaking, we're still within the trend. So as long as we're in the trend, we can remain positive. But always with a but, the chances of correction now, I think, are much more heightened because I can count 5 waves up here, and the dynamics of what's going on up the top here, mixed with mass sort of investor psychology, which repeats over and over, would suggest that we've been at a dangerous point here, which I've been pointing out for a while. That I think round here we're saying, well, this looks kind of wave 3-ish, but one more kick, which we sort of got, and now we're running into some stiff resistance up there. So even though this is all good, there's always a but, right? There's always a but. So let's go back to the candle chart. And I pointed this out before, we've still got these tops, all these wicks that the market's just battling to get through, I think. So when we start to look at some of the indicators, and this RSI has had quite the fall this week, and the reason for that is that the strength of this candle as it comes into the calculations has really dragged us down. Now, of course, the strength of this candle is exacerbated by the dividend. So I guess a grain with salt, but like I've said before, nothing else matters except where the price close today. That's the fair value that the market has agreed of the stock. So we have fallen away, but you can see here there's even a bit of a zone just coming in here where we peaked, we held, and then we're back on it. So we don't really want to see this slip, even though to me the danger zone still lays down here around this 40 area. Once you sort of get down there, then you'd expect the market to travel. If the RSI can break here, that what it means is there's enough selling momentum to drag the RSI down, and that would put us in a bearish cycle. So whether or not the bearish cycle started, I don't know. We do have divergence here. We can count 5 waves, and we do have these peaks here where the market is just 1, 2, 3, 4, 5, 6 weeks. It's battled to get through that top, and it hasn't been able to do it. So even though that dividend yield sort of upset the apple cart a little bit, and we'll have to see what happens into 2024, I'll again repeat, there's warning signs there. Even just quickly looking at this MACD, we haven't got a signal cross yet, but we're very close. And you can see here the ADX, the strength of trend is beginning to run out, which isn't surprising considering you've got these candles and basically this lack of movement. I highlighted this the last time, that we just had very little movement in the bodies through here. The market was still battling. And even though we had tried to push up again last week, we're failing away from this area. So just looking at this, these are the tops. This is just the area that we've struggled to get through, and obviously the dividend announcement has pushed us down, but we're sort of now in danger of falling out of this trend channel as it sits with a candle chart. When we switch it over to the line chart, we're kind of right on it. So once again, this little daily sort of trend that we've been in is holding. But yeah, geez, we're on the edge, aren't we? So what would we think sort of moving forward from here? Well, just looking at this little area here, The first thing I would just do is just take the bottom of this, the top of this, and we can see that the market has just come back 50%. In fact, interesting, when you change this to a line chart, and if you tighten that up to the actual closes, you can see we didn't quite. You can sort of tighten that up a little bit there, but you can see we basically stopped on this 50% line, which lined up almost exactly with this. So, just on a line basis, you can see how that sort of played out. But if we're looking at it on a candle basis, taking into account all the highs and lows and the wicks, we're sort of in the same zone. It ties in, because just here, this was where resistance became support, and it was tested again here, and we've just come back to that zone. So you would want the market to hold here, but of course, there's a few issues that we've got to get through. We've obviously got now this gap in the market. It'll get filled eventually, but the thing about gaps is, maybe that gap doesn't get filled till mid next year for all we know. It doesn't necessarily mean that gap is going to get filled in the next day or two. It can take a long time before the gaps get filled in. So I'm not making any prediction about that, but there is a gap there that the market will probably have to churn its way back through. And you know what? It might do it next week. We might just sort of trickle up here through next week, and fill that gap in. But it remains there. So even just looking at this coming back the other way, I would be looking to see how the market, any sort of rally, responded to this sort of zone up here between the 50 and the 61.8. Because once we get back up here, then we're starting to get back into this area where the market's just been struggling. Okay, so that would be the point of call, sort of up here, high 28s, low 29s, just to see if we can get up there and if the market can maintain any sort of buying up there. But once again, like I said, the way that this has behaved, it's obviously we've got the dividend that's come through, but you can just see that it's struggling to make any more headway through there after what's been a stellar 2023 where we've had a big rally. So it's struggling, and so that's really done nothing to change my thinking around sort of this Elliott pattern that's been unfolding. I think we've got a leading expanding diagonal into a 2, a 3, a flat 4. Even though this is hard to break down, we've just got a market that's diverging, running out of gas, and at the moment we're holding just above 40. But there's an example here, right, where the RSI slipped below 40 and the correction wasn't huge. But you can see here divergence coming back the other way. This is more like hidden bullish divergence. So even though the market made a low here, the RSI made a lower low, but the price made a higher low. So, like I said, divergence can take many forms. But I think the point remains is that this, as it sits, looks like a pretty good candidate for 5 waves up, which isn't to say, of course, that doesn't explode up further. But if I was just taking this at face value, on an Elliott sense, what would I be thinking? Well, one of the things we'd expect, if this is going to be a wave, then we're going to get a correction and then another wave as per the thesis. Well, usually what they sort of say is that wave 2 of a larger degree. So this would be, a wave up, and the larger wave 2 would correct into the price range of wave 4 of a lesser degree. So the price range of wave 4 of the lesser degree is this. So we're already into it. But, that would be kind of nice if we sort of got some sort of 2-wave down like that. Just in a pattern sense, that would balance out quite well. But, of course, this is gaps galore. It's not very clean. So that would be an expectation just from a textbook perspective. But whether or not we get that remains to be seen. But, for all the reasons that I've just said, that the market does look in a bit of danger to me of correcting early in 2024. Okay, so just looking now at URNM, and this has been even better. I mean, from where we opened on the first day of January to where we've just closed here today, 51% rise. That's great. That's fantastic. What a great trend we've had through 2023. That's a fantastic trend. But of course, the question remains now: has it run out of gas, and can we expect a bit of a pullback? Now, same thing again here, which isn't surprising, just on a weekly, just all this. It's just, you can see, maybe you can just encapsulate that. It's just battling here. It's running into some pretty stiff stuff. Now I draw your attention to the volumes, and I'm just looking. Obviously, you can see here this is the average of the volumes, but as we've crept up here to the highs, these toppy volumes, look what they're coming into. It just looks like there's people have definitely been happy to sell up here. I mean, we had this peak here, but whether or not this is a distribution event going on, I can't really make a Wyckoff sort of case for that. But what I'm saying is that you can just see here, just even in these last couple of weeks, there's just volume going on here, right? The market just looks like it's battling. There's just sellers coming in here to just hold the market, and I think once again we pointed out it's all happening around that psychological $50 mark. So I mean, last week we had a little kick up in the RSI, but generally speaking it's still going down. Okay, so we're still well above the danger zones, but once again, these sort of peaks, this divergence between the peaks is not what you want to see for an immediate continuation. So once again, I still think this remains in danger, because this also looks like 5 waves up. This remains in danger of a more major sort of correction early into next year, unless of course we can actually break through this zone. But the market is just battling at this $50 mark. It really is. And that's just reflected in this ADX, where it's just continuing to trail away. So the strength, which isn't a surprise, because when you just take all this into consideration, the market's not really going anywhere. So that's the strength of the trend is just run out as we run into this top zone around this $50 mark. But we've got to just stick with what we can see, and the bare bones of it is we're still in this uptrend that we've been in since May sort of this year. So we're not breaking out of this yet, even though we're starting to battle. We're still within it. So it's now a question of seeing whether the market can get outside of that, and if it does get outside violently, or does it just float sideways out of it. So that remains to be seen. But for the reasons I've mentioned, the battle that's starting to go on here, I mean, it just feels to me like the bears, the bulls are starting to lose out to the bears just at the top here around $50. So even just looking at this on a daily, and since we hit this peak, okay, so to me the main battle zone looks just like it's been through here, but since we've hit this peak, look at the volumes go up. So whether or not that means, well, there's obviously a lot of buying and selling going on here, but the fact that we haven't been able to break through this, even on raised volume, I mean, this is what was that? That was last week. It's just warning me that the more we bump into this with this volume, the more that the sellers are just winning their war. Okay, this market is just struggling at this $50 area. So let's just bring this into a line chart. Now, the one thing that concerns me, other than those peaks we've had, as we've mentioned, is that I'm just not loving this. The fact that we've made this high, now we've had this lower low, and now we've had this lower high. If we get another low below this low, well then, you've got that swing structure starting to go in, and this is starting to look like, even though it's shallow, it's just starting to form up as a bit of a bearish trend channel. So now I'd just be looking at this, because this is just, maybe that's not quite there, but you get the point, right? That swing structure is just starting to come in, where we've had this, we're swinging high, and that's great, and then we got this higher high, but now all of a sudden we got a lower low, a lower high, and what does the market do next? We'll have to wait and see, because you can see that the time that it took between these two. I mean, this could go on for a while before we either break this low, or we break through this top, and then that sort of developing swing structure gets broken. Now, another warning shot, of course, is that we had this pretty good trend channel going on through here that we've kind of lost it now. Even though we sort of got below it here, we broke up a little bit higher, but we're now starting to move outside of it. So that is not the perfect scenario, and this little bear channel is starting to hold a bit more sway. So Whether or not we have to redraw this, but I mean, we don't want to redraw this just to suit ourselves because it makes us feel better about our position. We've just got to look at what's going on, and this trend channel that's held quite well is now kind of breaking down. So we just have to look for the next point of call. And like I said, this little bear channel and this swing pattern that we're starting to see is what's grabbing my attention here at the moment. And just finishing off here with the cyclical sense, and I have actually shifted where I think that the low is, because the one mistake I made is one of the ways that you sort of think about when cycle lows are made is you want to see a break of the basic trend of the last cycle. Okay, so I've got this as the last cycle. I think I had it here, but we never really broke the trend, but we broke it pretty well here, and this still remains well within the range of the average cycle. So I'm kind of thinking that we actually made this cycle low here on January 14th to make daily cycle 4. So we're yet to fail here, but the swing pattern is starting to tell me that, yeah, that, you know, for all those reasons that I've just mentioned, that we're going to get a failed cycle here. So I'm still looking now. I've just pushed these dates out. So this is just the general range of where I'm looking for the next cycle low. But the one thing that's just bothering me a bit here is that we're just starting to close. This green line represents the 10-week moving average, and we got a couple of closes here below it. Even though we recaptured it, we're still wicking out through here for, you know, all those reasons that we said, that sort of $50 area. We're just battling to get through it. So I am expecting this cycle to fail, okay? And so the same sort of idea would remain in an Elliott sense. I would just now be looking for the larger sort of retrace. I'm not saying it's going to come back this far, and we don't have anything that's definitive here, but we know that we got divergence going on and that the RSI is tailing off. So that would be the general thought. I mean, you probably need to put this back to a line chart, but the general thought is that you'd get, you know, some sort of three-wave swing back to maybe not that deep, maybe that deep, maybe shallower, okay? Or maybe it's wrong altogether. Always a chance. But that would just be generally how I'd be looking at this now, thinking, well, okay, you know, you've got a pretty good candidate for a top here, and now that this swing structure is just, you know, starting to fail and this is starting to come in, is this it for now? And then we've got to expect and anticipate into early 2024 at least, are we going to get some sort of major pushback down? So just to sum up, you know, that's it. But I'll just maintain the stance that I have been maintaining, even though, you know, I can see the path for bullish prices going forward. My overall view of this whole thing still remains that there's an excellent chance, we've had 5 waves up, that early in 2024 we can expect some sort of major correction before the market makes its mind as to whether or not it's going to move on further or something completely different happens. But that is how I see it. Okay, so that as we round out the year, my view is that there's a pretty good chance of building case that we're going to experience a bit more of a major correction across the uranium space. So that remains to be seen, of course, but that's where we sit. So once again, look, enjoy your new year, and I'll see you in 2024. Thanks again for all your support. I really do appreciate it, and have a great New Year's Eve. See you next time. Bye for now.